Why does Bitcoin keep succeeding while other cryptocurrencies struggle to find their purpose? This question becomes crystal clear in my recent conversation with LeClair on the TFTC podcast. Dylan is the head of market research at Bitcoin Magazine and chief investment officer at Metaplanet, a Japanese public company that's pioneering innovative Bitcoin treasury strategies. Today we'll explore three key points: how Bitcoin's unwavering mission separates it from the crypto industry's identity crisis, why crypto's marketing tactics reveal fundamental weaknesses, and how institutional capital is voting with its dollars through ETF flows. We'll examine how Bitcoin's clear purpose and proven track record make it uniquely positioned as the only serious digital asset in institutional portfolios. Before we continue, if you enjoy these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. Let's start by looking at Dylan's fascinating breakdown of the stark contrast between Bitcoin's progress and crypto's constant pivoting.
You couldn't contrast that any further from the state of the crypto complex, right? Which it's constantly undergoing, this kind of
Pivot.
this pivot identity crisis. But, ETH BTC and the perpetual L1 competitor or layer 2 scaling solution that also has its own coin kind of thing. Like the fact that there's, sort of uncertainty on how these are all classified as quasi securities. Like I've seen it's always interesting to see sort of especially on the timeline, like the sort of existential questioning of like, so I've been it's like what they're talking about some meme coin pump and dump or whatever, and someone will go some .eth handle will say, what are we even building anyway? And everybody, either is in agreement or is chanting the kind of the talking points.
Dylan's insight perfectly illustrates why Bitcoin's progress and adoption are becoming clearly differentiated from other cryptocurrencies. While Bitcoin continues to march forward with a clear, unwavering mission of becoming a better monetary system, the rest of the crypto industry appears trapped in an endless cycle of reinvention and identity crises. What's particularly revealing is how he highlights the constant questioning within crypto communities about their fundamental purpose. This questioning isn't just casual doubt, it's a systemic issue that reveals deep uncertainty about what these projects are actually trying to achieve. In the Bitcoin ecosystem, you don't see this kind of existential questioning because the mission has remained consistent since day one, creating a decentralized, borderless monetary system that can't be manipulated by central authorities. This stability in vision and purpose stands in sharp contrast to the perpetual identity crisis plaguing the broader crypto ecosystem. When you're building something truly valuable, you don't need to keep changing your story every few months to maintain relevance. This clear differentiation between Bitcoin's steady progress and crypto's constant pivoting demonstrates why Bitcoin continues to gain legitimacy while other cryptocurrencies struggle to define their basic purpose. Now that we've established how Bitcoin's clear mission sets it apart, let's examine how crypto's marketing tactics further reveal the fundamental weakness in their value proposition. Dylan's next observation about Ethereum versus Solana's approach really drives home why crypto's narrative continues to fragment while Bitcoin strengthens.
I did see that tweet. To a certain extent, it's almost I could almost and I say appreciate generously, but I could almost appreciate the Solana meme coin mania as compared to the ETH. We're gonna build a world computer ultrasound money like. The Solana meme coin shill fest, while extremely degen and obviously zero sum, negative sum, was at least more honest in the sense of like, oh, dude, it's all vaporware. Like it's just this is just like the swan song of the fiat, the fiat complex. Like just gamble, like just gamble, man. Just spin the slots. Like what do you have to lose? Versus like with the ETH wave of 2021, that cycle, it was like no, this DeFi protocol has earnings and you can put an earnings yield and the legacy institutional investors are coming, and we need a token because of reasons, and so it's almost like it's kind of funny seeing the splintering of consensus there, because literally and figuratively, because it was always all vapor, right? All the tokenomics and everything else, it's all trending lower, and it's all going to trend to its, marginal production cost, which for basically all of these things is zero.
Dylan's comparison here brilliantly exposes how the crypto narrative has become increasingly incoherent while Bitcoin's value proposition continues to strengthen. He draws a fascinating contrast between two different approaches in the crypto space: Ethereum's attempt to position itself as a serious, world-changing technology, and Solana's more straightforward embrace of speculation. The Ethereum ecosystem tries to wrap itself in complex terminology and grand promises about building a world computer and revolutionizing finance. But when you dig beneath the surface, there's often little substance behind the marketing speak. This constant need to create new narratives and justifications for their existence reveals a fundamental weakness in their value proposition. On the flip side, Solana's ecosystem has essentially dropped any pretense of being something more than a speculation platform. While this might seem more honest, it also highlights the fundamental lack of real-world utility in these systems. Compare this to Bitcoin's straightforward value proposition as sound money. There's no need for elaborate stories or complex narratives because the fundamental value is clear and proven. This increasing incoherence in crypto narratives, contrasted with Bitcoin's consistent and strengthening value proposition, helps explain why serious investors and institutions are increasingly choosing Bitcoin over other cryptocurrencies. We've now seen how Bitcoin's clear mission sets it apart and how crypto's fractured narrative reveals its weaknesses. Next, Dylan explains how institutional capital flows are confirming this divergence, providing concrete evidence of Bitcoin's separation from the crypto space.
Yep, I think so.
Yeah.
I think, with the ETF flows for ETH have been, I think, non-existent, maybe even net negative. And so, it's clear that Bitcoin is, from an institutional framework, is much, it's a much more of a consensus than anything crypto, and that, the mechanics of those rails, like the bleed that comes from the Bitcoin appreciation into all these altcoins that everybody seems to just be banking on as if it's it's an absolute certainty. I don't think it comes, or maybe it comes, but in a different flavor. So yeah, I think that's it's interesting to watch. I don't have any skin in the game with any crypto, thankfully, but I know a lot of people that are doing some soul searching. So we'll see how it plays out.
The evidence of Bitcoin's separation from other cryptocurrencies becomes undeniable when we look at institutional capital flows, and Dylan's analysis here perfectly captures this reality. The stark difference in ETF performance tells a powerful story. Bitcoin ETFs have attracted billions in institutional investment, while Ethereum ETFs have struggled to gain any meaningful traction. This isn't just about marketing or narrative. It's about sophisticated investors voting with their dollars. The pattern we're seeing suggests that institutional investors understand something fundamental. Bitcoin offers unique characteristics that make it suitable for professional portfolio management, while other cryptocurrencies, despite their promises in marketing, don't meet institutional standards. This divergence in capital flows reflects a deeper understanding in professional investment circles that Bitcoin's simplicity, proven track record, and clear value proposition make it uniquely positioned as an institutional-grade asset. The rest of the crypto market seems to be operating under an assumption that Bitcoin's success will automatically translate to success for all cryptocurrencies. But as Dylan points out, this isn't playing out in reality. Instead, we're seeing a clear bifurcation in the market. Bitcoin is increasingly being treated as a legitimate financial asset, while other cryptocurrencies continue to struggle for institutional legitimacy. This separation is likely to become even more pronounced as traditional financial institutions continue to build products and services specifically around Bitcoin. The flow of institutional capital serves as perhaps the most concrete evidence yet that Bitcoin has successfully differentiated itself from the broader cryptocurrency space, establishing itself as the only digital asset that truly matters from an institutional perspective. The data doesn't lie. When it comes to serious institutional investment, Bitcoin stands alone. What do you think happens when institutional money can't handle Bitcoin's volatility? Let me know in the comments. I read every single one. And if you found this breakdown of Bitcoin's separation from crypto interesting, you'll want to watch our analysis of how Bitcoin becomes too big to fail. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching. Stay humble. Stack sats.